Roger Stone here. Every day you wait, your money loses value, but gold and silver don't follow those same rules. American Sovereign Bullion gives you access to a nationwide wholesaler network, helping you secure aggressive pricing on real physical metals. Call 844-272-2428 now to get your free gold and silver guide to learn how to protect your wealth with physical gold and silver, delivered right to your door or with a gold IRA. Visit asbgold.com. That's asbgold.com for your free gold and silver guide today.
Listen, all you New Yorkers. Taxi. Okay, we're looking around.
This is the 77 WABC minicast.
And I'll mention again, as I did at the top of the show, the big jobs number yesterday, twice as much as the consensus, 123,000 private payrolls. Last month, March, 190,000. We don't need that many folks anymore because we're getting all the deportations. The break-even, actually, according to our guest, John Carney, the break-even could be as low as zero. I've noticed, John, but let me get Breitbart news editor for economics and finance and co-author of the daily Breitbart Business Digest. We've got E.J. Antoni, top economist at Unleash Prosperity and the Heritage Foundation. You know, John, ever since you started this break-even stuff, I've noticed a whole lot of people have picked up on it, so score one for Carney. But can I, before we do jobs, can I just, you emailed me this morning, and it's in my brain, Forbes magazine beating up on Trump because his portfolio has increased, 27%, but so is everybody else's. I mean, we've had a phenomenal run. It's the best profits in 20 years, and we're breaking records in all the stock indexes. So why are they jumping up and down about Trump?
That's right. Look, they create an illusion because there's a large base number. They say Trump has made his net worth has risen by $1.4 billion since he came into office. Well, that's true, but that's because he had a lot of money to begin with. He's only up 25, 26, 27%. If you were just in a NASDAQ ETF, you're up 33%. If you're in an S&P, you're up 25 to 28%. Total returns a little more. So this idea that like somehow he's enriched himself, and this is a liberal fixation that Trump uses his administration to enrich himself, is belied by the fact that it's actually enriched everybody who has investments. It's the asset appreciation, which is great for everybody, that has really helped. It's not, they want to focus on, and the Forbes magazine particularly says that he has been presiding over the most lucrative presidency. That's actually not true at all. Barack Obama's net worth went up 140% while he was in office, and the rest of us didn't do anywhere near that well.
How about Joe? How about Joe and Hunter Biden?
Of course.
How'd they do?
They've done. These guys did better without the gains. The thing that Donald Trump has done is to be honest, he's less well invested than he could be. His investments are concentrated on a risk-adjusted basis. He's actually done a little worse than the rest of us because if you're in a diversified portfolio, you did amazingly well over the past year.
How about Nancy Pelosi? Right, she's the greatest
in the market every time.
EJ, she's the greatest. She beat Warren Buffett. I mean, she's the greatest investor in American history.
Absolutely, Larry, with a sharp ratio that would put anybody else to shame. It's absolutely incredible. And what's really fascinating, Larry, I think, is that with the advent of things like betting markets, whether it's Polymarket, whether it's Kalshi, right? You're increasingly seeing people able to make bets, and there's clearly some insider trading going on. And what they're essentially able to do is make all kinds of bets for which you don't even have financial instruments available today. And now the DOJ is having to essentially clamp down on it, and they're having to do some investigations into some of these very, very suspicious trades where you have a small group of people, for example, in Congress getting an intelligence briefing and then somehow a very suspicious and very lucrative trade gets placed right before breaking news. So it's a brave new world we're entering, that's for sure.
You think Nancy Pelosi had inside information? Oh, my gosh. How disillusioning. How disillusioning. Gee whiz. Her husband, by the way, was a client of Bear Stearns when I was there 30-plus years ago when there was still a Bear Stearns. Anyway, I digress. EJ, big job numbers yesterday, and I hope I can sell this to both of you, but for years and years and years, when I was an economist on Wall Street, we used to look at, Ed Hyman did, I did, Yardeni did, the wage income proxy. So you take average hourly earnings times hours worked. What dummies do today when they're looking at wages, they just look at the hourly earnings. You have to also look at the hours worked. Now, here's my point. For production workers, non-supervisory production workers, this is the blue collars, okay? They got 0.3% increase for the month, but the hours worked were 0.2, so it's 0.5. It's 0.5%. Over the past 12 months, gentlemen, here's the deal: their blue collars 3.7% increase in wages plus a 1% rise in hours worked, manufacturing hours. That's 4.7%. That's the wage income proxy, 4.7%. Now, you can knock that, even with the oil prices and gasoline, the PCE deflators, whatever it is for 12 months, it's about 3%. Some of the medians are less than that, 2.6, 2.7. Unit labor costs, which may be the base inflation rate for everything, is only 1.2. So even with this, the blue-collar workers are beating inflation. That's my point. Now, am I wrong here? I mean, that's what the wage income proxy is saying.
Yeah, Larry, if we look at not only that, but just take the average American's weekly paycheck and adjust it for inflation, right before the war, it had risen about 2 percentage points since Donald Trump took office, because we've seen such robust wage growth that you're talking about. And it's not like we saw, for example, under Biden, where, yes, average hourly earnings went up at a good pace, but the number of hours people were working in a typical week was dropping. And then throw in inflation on top of that, and that's how you get those negative average weekly earnings. But again, for Trump, it was positive. Now, unfortunately, with higher gas and diesel prices, as you know, we've given back some of those gains. But the fact of the matter is, if the Trump economy keeps this strong wage growth going, which all the data says it will, and then you on top of that can get oil prices back down, which hopefully happens soon, you're going to return to that real wage growth, which is going to be great. That's a big reason why Trump got elected, right? People were dissatisfied with the fact that by the time Biden left office, their paychecks bought 4% less than they did before, even though those paychecks exploded in nominal terms.
No, I get that. But, John Carney, when you look at this, manufacturing is picking up, construction is picking up, transportation, freight hauling is picking up. Those are blue-collar jobs. I'm just saying that wages times hours worked is running way ahead of even this, wartime inflation, this temporary wartime inflation we're seeing.
You're right, Larry. I think we're actually going to see even better gains, because one of the things that was in the reports we got last week was actually showing that while wages are going up, corporate profits are also rising. That will actually increase competition for workers because businesses want to get those profits. They're doing so well that they are going to be bidding out, and we don't have a very large labor force growth right now. So what that translates to is businesses having to bid for workers, which will translate to higher wages, but non-inflationary higher wages, because output is rising very quickly. This is a great recipe. Again, it's unfortunate that we have high gasoline prices weighing in, but this is a recipe for widespread prosperity. And I think we're seeing the beginning of that. And I think what we've seen so far is actually only the beginning. I think it's going to accelerate as time goes on.
All right, let me take a quick break. I want to come back. I want to look at the productivity numbers, the unit labor cost numbers, and the profit numbers. Profits are the mother's milk of stocks, but profits are also the lifeblood of the whole economy. It's a different model. It's not a consumer demand model. It's a profits-driven model. And right now, profits are rising their best pace in 20 years, according to a number of analysts. Anyway, gentlemen, just stay right where you are, please. John Carney, co-author of the Daily Breitbart Business Digest, E.J. Antoni, who is the top economist at Unleash Prosperity and the Heritage Foundation. So, John Carney, I'm looking at the productivity numbers. Non-farm productivity, that's output per hour. The last 4 quarters, to smooth it out, 2.9%, almost 2.9%. And as a result of that, even though wages are up 4.2% in this report, unit labor costs only 1.2%, the cost of labor. Now that, some people believe, is the basic core inflation rate. So the point is it's low. Second point is productivity is soaring. Third point I'll make, and give it over to you, I think a lot of this has to do with business investment, CapEx, capital equipment, 100% depreciation, which has now been permanent in the One Big Beautiful Bill signed last July 4th. This all goes together, and therefore, if you have high productivity and low labor costs, you're going to get big profits. And profits drive stocks, and profits drive the entire economy. You can't have consumer demand without profits. This is what people miss. Profits are a supply side, business side way to look at the economy, and right now they're soaring. They're just soaring.
That's right, and it's a virtuous circle because as you raising profits, you actually attract more money to investment. It's funny because just a couple of years ago, Larry, economists were like scratching their heads, pulling out their hair, saying, why are productivity gains so low? And it turned out that a big part of the problem was that we were overtaxing investment in productivity. We're still actually overtaxing investment in productivity because of the way we tax capital gains, which reward the investment in productivity is a capital gain. But right now, what we're seeing is because of this depreciation, the depreciation rules, more investment, and frankly also because of the immigration restrictions. And so businesses can't rely on cheap labor to grow. They need to invest. You combine those two things, and what you have is this rocket ship of investment that is now pushing up productivity. So it was an easy fix all along. They acted like it was a great mystery. It was not. What we needed was investment that would increase productivity, that then creates more profits, that then attracts more investment, that increases productivity. It's a virtuous circle.
See, E.J. Antoni, this is going to go on for a while. I mean, if you start seeing quarterly declines in profits, that's a different story. But nobody's seeing that. Your profit margins for GDP is running about 16 or 17%, which is huge. And the company's reporting roughly the same. And forward earnings, I always look at Ed Yardeni, who tracks profits as well as any economist on Wall Street. And, you know, he's got consensus views for forward earnings basically running the same, 15, 16%. It's why the stock market keeps rising. Stocks are not overvalued as long as the earnings are there. And the economy has a tremendous potential to grow faster than usual because of all these factors, productivity and unit labor costs and business investment. And ultimately, right, if you pay your workers more, they'll have more money to spend. They'll have more income, kitchen table, you know, wives can go out and spend and send your kids to the right school and all the great things that come when economies prosper. And that's what we're seeing. And you wouldn't know it from reading the newspapers, but that's what's happening.
Well, right, Larry. And, you know, you wouldn't know it from reading the newspapers, especially when they're talking about things like AI. And frankly, they're scaring people with the whole talk of AI is going to kill all these jobs and everything. Sure it is. It's going to eliminate some jobs, but it's going to create others. And let's not forget, you're never going to lose your job to AI. You're going to lose your job to somebody who's using AI. What I'm getting at, Larry, is AI and other technologies are behind this productivity boom. And so you're not going to see these mass layoffs and all this unemployment. Instead, you're just going to see one job replace another. And that productivity boom that you're talking about, you're absolutely right. It's what's going to drive wage growth. That's what technological advancement does. And when you have more money to spend, that's where you get that job creation. You might see less labor demand in one area. You're going to see more labor demand in another. It is that rising tide that lifts all boats.
I love that. John Carney, the Democrats sitting around twiddling their thumbs praying for a recession ain't going to happen. It's not going to happen. There's almost no signs of any recession, but they're banking on that. That's all.
If you look at the numbers, Larry, a lot of Democrats are bizarrely convinced we are already in a recession.
Yes.
When I look at the poll numbers, Democrats will tell you, yes, we're already in a recession. When those jobs numbers came out yesterday, a lot of the legacy media was flummoxed because they are so convinced that the economy must be falling apart because they hate Donald Trump so much that they think only bad things could happen, that when the headlines came out at first, you could tell they pre-wrote them to be disappointing. They said things like, jobs drop or, drop. And then when they finally got around to getting it right, they said things like, well, this was a good number, but, the underlying blah, blah, blah was not very good. The fact is this is a second huge beat. You said it was, we beat it by, twice what expectations were. As I said, I think the break-even number, and it's not just me, this is actually the real math on this was done by researchers at the Dallas Fed. The break-even number is 0 to 10,000. So we got something like 10 times as many jobs as we needed for the economy.
Yeah, I heard a lot of weeping yesterday, a lot of weeping, and too bad. Prosperity is a very good thing indeed. Thanks, gents. Appreciate it. John Carney, E.J. Antoni, terrific stuff.
The Larry Kudlow Show on the Red Apple Podcast Network. Listen to this podcast now on the Red Apple Podcast Network. The Leadership Thread with Dr. Peggy Polonis.
I'm Dr. Peggy Polonis. Join me on each episode where I unravel the story that shaped leaders, tracing the thread that led them where they are today. Because leadership isn't born in adulthood. And thank you once again for joining us on the Leadership Thread, education, ethics, and sustainability.
Download all of Red Apple Media's podcasts right now through your favorite podcast platform.